All right, welcome to another video in the AM Trades channel. So in this video, I'm going to be talking about the current strategies that I'm using. So there's three systems, the systems that I'm currently using, the ones that I'm forward testing, the assets that I trade, why I trade them, and then also just going to be talking about what my plans are for the foreseeable future. So let's get straight into the charts. All right. So first things first, you'll notice that I have a lot of different assets here on the right-hand side. So let me explain why that is. So like I said, I have three systems. The first one is a swing trading strategy on the 4-hour chart. It's a simple trend trading strategy. And so I'll walk you through it via this example on silver. But basically, these are all the assets that I'm currently trading for this strategy. So we have US indices, US 500, which is SPY, US 30, which is the Dow, and then VIX is kind of just an indicator so I can gauge how volatile or stable the US market is. Then you have a list of different Forex pairs. The second system is actually on Euro USD, so that doesn't fall part of this system I'm showing you now, but we'll get to that later in the video. Then we have three big crypto coins, a mix of different commodities, and then these stocks is part of the third system, so we'll get to that later in the video. And I like trading multiple different assets just because in any one area, so let's say US for example, there is a number of volatility events that can affect US stocks, US indices, and US forex pairs. So if that happens, let's say there's FOMC in a given week, right? The Fed funds, the reserve, Federal Reserve is determining the Fed funds rate. Then I can just avoid US pairs. I can avoid the US indices and trade some of the other pairs like say GBP JPY. Not to say that those assets are not also sensitive to US news releases, but less so. So that's basically why. And another reason is because I only allow myself for this strategy one trade per asset per week. So say if I have a trade on USDX, the US dollar index, for that week, and I win or lose, doesn't matter, then I won't touch it again till the next week. So it just gives me more options, more setups, if you will. So yeah, that's why I have multiple different assets. But also sometimes what I do is if I see a setup on ETH, for example, some of these pairs and assets are very correlated with each other. So ETH, BTC, and Sol very correlated with each other. So if I see a setup on ETH, I will take the setup on ETH, but I won't take the setup on BTC and Sol because I don't want to over risk in one setup, especially when the assets move so similarly. So I'll take the setup on ETH, the outcome will happen, and then I'll leave BTC and Sol for another setup during the week if it presents itself. All right, so we'll move on to the system. So first thing to note is I don't really do top-down analysis. I do a little bit, like during the start of the week, I do a weekly preview. I look at where we are on the weekly, the daily, but it's not an integral part of the strategy. So if the weekly and the daily are trending up, that doesn't mean I won't take a short. I'll still take a short. Um, I, I, I prefer to take longs because it's good to be in confluence with the higher time frame trend. But if my setup presents itself, I'm just going to take the setup. So this is the strategy here. It's just based on simple breakup structures and market structure shifts, which I call market structure breaks. So yeah, you just mark out, what. Oh, and also you're trading in line with the 9 and 21 moving average on the 4-hour chart. So these colorful lines here, the yellow is the 9 moving average, the purple is the 21 moving average. And this is just a kind of a, you know, trend indicator, short-term, medium-term trend indicator. Um, so yeah, so you mark out key levels. So for instance, here you would have marked that out as the breaker structure level. Once you broke that structure, you could have taken a long, and again here, and again here, and again here as well. And that's basically it. And then when the trend reverses, you wait for a market structure break. So market structure break happens at the swing low. So you see here, we were trending up. Price kind of made a small bottom here, and then it tried to go again, but it failed. Then it broke that swing low. So that's the market structure break. You don't trade the market structure break initially. You wait for price to come down, for it to form its first lower low and lower high. So to consolidate a bit, mark your breaker structure level. Then on the first breaker structure, you take the trade. So you enter at the close of the 4-hour candle. You put your stop at interim high for a short. So interim high. So that's swing high right there. Interim high could be here, could be here, could be here, could be here. I think for this example, I just chose above this one here because it was in the middle. And you aim for 1R, and then that's it. It's really simple. I think as you go further in your trading journey, you realize simplicity and risk management and consistency is basically all you need to be a consistent trader, and then obviously managing your emotions. But at a very high or fundamental level, risk management, simple strategy, and consistency. So I have been forward testing this strategy since the start of September after a lot of back testing, like I'm saying hundreds and hundreds of different back tests. And so the results were promising for the last, from September till now. So 1st of September, 8R, 2nd September, sorry, first week 8R, second week 8R, third week 3R, fourth week minus 5R, and so forth, and so on. So I really, in the beginning, I was really kind of in a rush to trade, rush to make money, and then I slowed it down. I, went back to fundamentals, price action, and then I developed a strategy. I spent a lot of time back testing, and before being, just putting money on the line, I started forward testing. And during the last 2 months since September, I basically started with risking no money, and every week I've kind of incrementally increased my risk. So now I'm forward testing at about $100 per trade, so risking $100, and I aim for 1R. So if I'm risking 100, then the max I'll gain is 100 as well. And the plan is for the rest of the year, I will just trade my personal money with this strategy, and then for 2026, I will look to use prop firms and scale up. So that's the strategy for the 4-hour swing trading system. So as you can see, lot of different pairs, US indices, Forex pairs, crypto, and a mix of commodities as well. So now we'll move on to the Euro USD strategy, which is the exact same as the 4-hour strategy, essentially. It's based on price action, trading with the trend, break of structure, trading in line with the 9 and 21 moving average, except it's on the 1-hour chart. So it's a bit more active. So for this one, I tend to check the charts every 1 to 2 hours. Unless I have an alert on, then I don't really need to check, because I just wait for my phone or my computer to give me the alert and I enter the setup. But it's the exact same. You aim for 1R, you wait for break of structure. If you're trading trend changes, you wait for the market structure break, and then the first break of structure after the market structure break. And so this one as well, I've just started forward testing, so I'm in my 3rd week. So first week 4R, second week 3R, and this is just the most recent week. This is I ended the week with an active trade, so the results for this week haven't actually resolved themselves, but it's either I go back to 0 because I only aim for 1R, or this becomes minus 2R. So we'll see how that trade plays out. And one thing to note is that these strategies really work around my life. Like I've done a lot of back testing and tried to do trading on the 5-minute, 15-minute chart, and it just doesn't work for me. I find that I miss a lot of setups because I do work full time and I have other responsibilities. So trading on the 4-hour and the 1-hour really works for me. And also, I'm always entering trades basically only when I'm awake, right? I have to be awake to enter trades. So sometimes I do miss setups, particularly if I don't wake up early. If I wake up at say 9, but there was a setup at 7, I'll miss it. It happens. It's part of the strategy. I missed a nice setup on AUD and Australian dollar, New Zealand dollar this week. So over the course of my forward testing, I've noticed that I probably miss about 2 to 3 setups per week, but it's still profitable. So you can see here, the price was trending up all week. I missed this breaker structure, and then I missed that breaker structure, but that would have been a loss, so that's okay. Then I missed that breaker structure, and then this morning I just wrote maybe I can trade it via setting a limit order here and still trading that breaker structure. So yeah, that happens. It's part of the game. And the last strategy is with US stocks. So the US, so this strategy is a bit different. It is still on the 4-hour chart, but it's not just breaker structure and market structure breaks. This is based on the box theory, which was developed by Nicholas Darvas, a trader in the 50s and 60s who developed this theory. He wrote this book called How I Made $2 Million in the Stock Market. It's a great, great book. I recommend that you read it. And it's very simple. It's just you see these kind of boxes I've drawn out. You just look for price to consolidate and be range bound and form a box, wait for it to break out, and then enter on the breakout, aim for 1 hour. So an example is this kind of box here broke out. You can put your stop. You can put your stop at box low. You can put it at an interim low within the box. For this example, I kind of just put it at an interim low for a long, that is, and I aim for 1 hour. And what I noticed with this backtesting, this strategy, is that these boxes, you see how sloppy they are. It's kind of wide ranging. They're not as reliable as, say, these boxes here, the ones that are prices consolidating in a tighter range. So I call this obvious boxes because it's very obvious that it's a box, whereas these ones, it's not so obvious, like so obvious. Like this one here and that one here, they're not great boxes. This one here and this one here, perfect. So yeah, I was forward testing this actually just the beginning of this week, last week, and a bit the week before that. I've been back testing. But before the 4-hour swing strategy, I was actually using this strategy, but I was still a beginner and I was trying to do options, which for a beginner is probably not recommended. And yeah, but I'm back to it now. I found out the 4-hour chart really works for me. So yeah, that is the 3 kind of strategies I'm working on at the moment. Oh, I'll show you the results for this one for this week. So I entered how many? 6 trades, and I won 5 out of 6, so 83% win rate, which is pretty good. I know not all weeks are gonna be like that. I know this is probably a very high performance week. So yeah, first week of forward testing, can't complain. And I can show you what I've done as well, by the way, is for every asset that I'm applying the strategy for, any US stock that I'm applying this for, I have to do at least 20 to 30 backtests. And within that sample size, it has to have at least like above a 60% win rate. And then I deem it a tradable asset. So you see here, I've noted that this has 70% win rate. So I added to my list and it's now a tradable asset for me. So this was a setup I took this week. It was a breakout of this box for AMD. What was the other one? It was Cisco. Cisco moved nicely. I traded this breakout. Apple traded this breakout of this small box here. Wells Fargo tried to traded that. See how it's a messy box, right? It's very sloppy. Not a very reliable breakout. So I got the loss on that. AMD I already showed you, and then PLTR, very nice breakout. So yeah, and the plan is, I'll probably just start forward testing this with equity now. So I'll do maybe $100 risk, just equity, no options, and then as I forward test this a bit more with low risk, I might move to options, or I might just stick with equity and increase my risk amount, which is, I don't know, maybe I'll go from 100 to 200 to 500 to 1,000 to 5,000, so on and so forth. But there is also prop firms for stock trading. So there's one called YouFunded. I have an account with them, which is kind of sitting idle. So I might use that as well. Let's see. So those are the approaches that I'm adopting at the moment. I think I'll caveat the video by saying I've done a lot, I've done a lot of back testing, a lot of forward testing, a lot of research, a lot of reading. So this is not something I just pulled out of thin air. this is a lot of trial and error, testing, failing. That's it. Let me know your thoughts, and I'll see you in the next one.